Good evening. This is the Elliott wave update for the S&P 500 for Monday, July 25th, 2022. Basically an inside day in the markets today. We did see a fair representation from both the buy side and the sell side. So the market had some decent moves, and many of them were early. Many of them were right out of the gate, and maybe a little sloppy, but still tradable. And when the downside kicked in, it became very clear, very apparent. And so it was a matter of just kind of hanging on. Just hang on to your short. In any case, the day did not produce any breaking news in ways in terms of an Elliott wave count or what the market may do tomorrow. We left it off on Sunday, yesterday, that we could have reached our high for minor wave 4. So again, in the minor 4, here's the A, there's the B. We're looking at the C wave. This could have completed the move, but it makes it a little bit more cleaner if it was only the top of wave 3 of C, and this is wave 4 of C, and then we get a 5th wave up. I believe it would be a quick 5th wave, very similar to this one, where we just kind of come in and it goes, it gets up, it puts in the new high, and then it dies. That would be my anticipation, particularly with what we've got lined up coming out tomorrow and Wednesday and Thursday. Just to quickly review, tomorrow we have the FOMC meeting begins. We have consumer confidence at 10 a.m. along with new home sales. I'm not suspecting consumer confidence is going to show this great big boost that we're all like, rah, 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 we're behind you, Fed. I don't think that's going to happen. We're seeing signs, et cetera, et cetera. I don't go for any of that. We're going to go by the number here, okay? So I'm not expecting that we're going to get this joyous consumer confidence and new home sales. From what I can tell from my own area, new home sales, I believe, are down. Not all, but again, they're marked red. The market can take them as information on inflation, etc. We also have Microsoft reporting tomorrow. Then on Wednesday, we get durable goods, international trade in goods, and then we just get to wait a few more hours and we get the result of that Fed meeting at 2 p.m. Eastern with the Fed chair conference coming at 2:30. So, and then we also have somebody reports on the 27th. I believe you me, it reports on the 27th. Our biggest day, of course, is going to be Thursday, where after we have the Fed meeting, we will then roll that into GDP and jobless claims. Those two will fit, and whether it'll drive it lower again, because maybe this wasn't enough, who knows? But again, I don't have a lot of interest in trying to figure out what that should be interpreted as. What I do have a bigger interest in is paying attention to the levels, paying attention to which direction supply and demand is headed, and then knowing what levels can open up in that area. And so that's what I'm going to think becomes more important in terms for trading, because we're just attempting to go along for the ride. And when it's real choppy, it's not a fun ride. It's more of a let's stay out type of a ride. So there are times when it's real choppy that you kind of got to take a step back, take a little bit larger look, like an hourly chart, a 4-hour chart. And if it continues to show you that the market should head in a particular direction, then you might want to stick with the trade. It's a little bit more difficult. In any case, what we do have coming up, we have the FOMC meeting. We will know what interest rates are going to do or not do. They're already attempting, by holding this up, that what I believe the market tries to tell us now is that we've already priced in 75 basis points. We got it. Yeah, you're going to shock the market. Sure. Come on, let's go. And also, they've really been putting them in that the market second quarter earnings are going to be good. They're going to be satisfactory. We're going to be okay. Well, that's not kind of turning out the way I don't think that group spoke that was putting out all that banter really kind of got caught up in, I think, because it's not working out that way. We are hearing from companies like Target and Walmart and other retail that's like, oh yeah, it filtered down to them. And now it's about inventory. Now it's about how costly it is. And now it's about wage increases, et cetera, et cetera. And that just keeps on rolling downhill until eventually we all get it, and the price of the stock and the price of the index. So it continues to just be a repricing process. And that's what continues. So the market is trying to factor in that that's already been done. I don't see how. Because they're basing their calculation on that the Fed had talked about 7 interest rate hikes by the end of the year, or into 2023. I'm not sure, but 7. Now, what they didn't say is 7 how much hikes. But if they're talking about 7 quarter point hikes, well, then we're almost there. We got 13-week paper. It's at above 3%. Yeah, we're there. We were there. We were down to a 0.25%. We're done. And it's like, really? There are lots and lots and lots of money that has been printed that just is sitting out there, and it needs to kind of get somewhere a little bit safer than where it is and into something else than what it is. So there's a lot trade. There's a lot trade going on. So please. So Thursday, GDP, jobless claims, and then Thursday afternoon, the main event. We get Amazon and Apple. And both, I would imagine Amazon's got a lot to show, because they actually, were pretty honest in the first quarter, took a loss, reported a almost $6.8 billion loss or something in that neighborhood. And so we'll see how they're doing now. I know just personal usage, I use Amazon a lot. I get a lot of things just delivered to the house here. And so, but, we've seen Prime memberships go up, et cetera, but I don't know how many people walked away, who stopped, et cetera. I don't know. So they'll have to report, but I still believe that inflation has not stopped. It hasn't stopped on the producer level, it hasn't stopped on the consumer level. So why would suddenly Amazon be making $1.5 tons of money? As if everything's been taken care of. So I don't see that either. Anyway, what we got going on is a lot of heat. It is hot. We've got the weather. We've got climate change. We've got the Ukraine. It's hot. Everything is a hot issue. And so why we're climbing a wall of worry during a hot issue always surprises me. But I take into consideration the entire move is corrective. Now, yes, I understand that there are a lot of funds and the fund managers, and they have computer models, and a lot of those computer models have switched and declared bullish. The market is bullish, and that is fine. I still believe that we will have an additional drop down to 32.25 in this area. And again, once I have a top in for wave 4, I will then put in one more layer that will show us downside. These are just retracements within. This is how high the market can go. So let's start there. If the market continues to move higher, it would need to get above 4,017 or 4,018 to put in a new high, to put this as wave 3, this is 4, and we get that 5. We get up there. With everything that's yet to come up, it just becomes highly suspect if it gets up that high. Something is going to have to be interpreted as really good. It's okay. It's A-okay. We're heading higher. Grab your money and let's head for the beach. So it could. That's all I'm going to say. It could. And then we have that resistance at 4,020 to 4,040. And then ultimately we still have resistance at 4,075-ish. So you could actually say from like 70 to 75. And if it gets up there, I'll be surprised, because they will be interpreting. A lot of these companies will be presenting us surprises to the positive rather than surprises to the negative. If I think for them to really start to move some of these issues, i.e. Apple, you see how easy Apple just kind of slid back down from 156 back down to 152, and it was lower, but they're going to try to hold on, because guess what? At the very end of all of this, on Friday is an expiration. So there's going to be a lot of play. Where you think you want to put it is going to be a lot of areas that need to be covered. This being one, all the way back down to here being the second. We have one that could take us higher and one that could take us lower. And sides are being chosen by a lot of bigger funds. That's why, if you remember, I commented several times last week that the money flow coming in was pretty strong. And we're seeing it. And I said, where? We were seeing it in Apple. We were seeing it in different stocks. We saw it in Meta. We saw it in Microsoft. A lot of the stocks that suddenly turned tail and are heading lower. Also, Tesla. Tesla got run up really high. It sat up there and exchanged a lot of shares. So money in, money out. Now, I see the funds. In any case, let's see what happens. Downside play, I'm thinking it could be quick, could be fast. If this is going to be minor 4, I'm looking for a minor 5th wave. Now, I'm looking for that minor 5th wave to complete. I'm going to pull this open just for a second. The intermediate wave C, I'm looking for it to come down to here. I'm going to fill a lot of that in, and I'll do it before I even get off the screen. We'll give an estimate. But coming down into here, finish the intermediate C wave. That in turn puts in the primary A wave. That in turn suggests that we move in and we will trade within the confines of a primary B wave counter trend rally. We'll rally, and it's likely going to be 2 months, 3 months, 4 months. Possibly we could carry this, if we can get it going by the beginning of August, then I'm looking August, September into October should be definitely nice trading months. There might be periods where it'll just kind of slow down again and we won't get very far, but that's a B wave. But I think we'll have good periods, because right now the hunger to buy and to have these positions and say, see how I did it, I got in and I made so much money. Yeah, but that I think is out there and people want to see it. And so whatever happens, a lot of funds calling it. We're not bullish, and they have reallocated funds. Well, I don't know if a stop will get triggered. I don't know if just a trigger will come up that will turn it back to bearish as we get down into here. But if they don't, then I do believe that if they sit still with it, will come down and we will come back up. And the B wave, I would pretty much not guarantee, but heavily weigh in that direction. We'll get ourselves back above 4,000. The B wave will also be an ABC affair. But we're going to see how that comes into fruition, how it forms. Because once again, even though ABC on an intermediate degree, that produced the primary wave A, it's also going to be an intermediate degree ABC that's going to produce the primary B wave. So we get a lot. And because this is going to be considered flat, we could run up and get dang close to 4,800. No, seriously. And it's going to be wild if they do it, but it's out there. And I'm not saying that's what's going to happen. I'm saying if I get down to here, we get a B wave. And the B waves, when you study Elliott, come in different formations. One of them being that it can move to a new all-time high in this case, and still be corrective and still drop down pretty hard, very hard in an primary C wave. So we have primary A, and it brings us down here, and then a primary B happens to get us back and above, and we label it primary wave B. Then we have a primary C wave taking us all the way back, and then some, and then some. So hopefully a little bit later on, maybe even over the weekend, I'll try to put together a little bit more lengthy and discuss more detail on terms of the buildup, getting up in there and how long it's going to take. So we're talking several months in this B wave, folks. So first, let's get through the A wave. If we get this, and this is the top right there, and let me go this way. All right, so if I put on, yep, I can do it. I'm going to put on some from the top of wave 2 to the bottom of wave 3 to the top. I'm calling the top of wave 4 at yesterday's high. I'll stick it right there and then go take a quick peek. And it actually was 1625. All right, so let me go right here, edit the properties, and say 1625. 16.25. Okay. All right, so I'm going to leave it right there. So what we're looking for on downside, and let me take out this other. Not going to let me. Okay. I got 2 of them running here, and not the retracements. I want the other one out. I'll have to leave them. I'm sorry, folks. This one, maybe not. Yeah, this one I can get rid of. All right, so this one is to the downside. If we have, and this is wave 4, here is what we're living. And we have now a zone, actually the zone's building up here. The zone is building a little bit above this. The zone is building at 34.82 down to 33.36. But again, if wave 5 is going to be equal to wave 3, then we're looking at 31.51, and that puts us back. So it's a bigger zone, but it runs from 34.82 down to 31.51, and it's all going to be dependent upon the wave count itself, the internal wave count of a minor 5th wave, which should have 5 waves in and of itself. So could be fun. And that would be what I am expecting there. But again, I need to leave open the potential for the other side to come in and finish this C wave. And that would require another trip above 4,000, another trip above 4,016, 17, and then up into resistance that starts basically 40.20 down to 40.40, and then we have 40.75-ish, plus or minus 5 on that, up here at the top. And then still coming and doing this 5th wave. Again, just waiting for the market to give us all of that information and giving confirmation to either we're up there, we just did the 5, and now we're dropping in the minor 5. So we finished C wave, and now we're dropping in the minor 5. Or what we reached yesterday was the top, or actually Friday, was the top of minor wave 4. And we're already in the beginning stages of the minor wave 5. That's the case. It should break these moving averages pretty quickly. These are dailies. We got the daily 50, which has been sitting and playing all day at 39.60. We got the 4. Then we got the 8 at 39.31. We have the 20 at 39.02. Starts to break there. Now we're into fib support And that's at 38.14. And then if it keeps going, you're just going to get more confirmation, particularly if it starts to break below the low at B, which is at 37.21. That's going to give us a pretty clean sign. Definitely, if it is the minor fifth wave, we'll be looking for it to break 36.38. That's actually 36.39. Get it below there, and then we're talking into these levels. All right, I'm going to end it right there, and our next update will be on Tuesday, the 26th of July.